Good evening, everyone, and welcome to our Smarter Homebuying webinar. Thank you so much for joining us this evening. My name is Angela Dennerson, and I'm a Senior Business Development Officer at the Los Angeles Police Federal Credit Union. Whether you're buying your first home, next home, retirement home, or investment property, this session gives you clear steps and practical insights you can use immediately. Our goal with this webinar is to help you navigate today's housing market with confidence, understand what you can afford right now, reduce risk, avoid budget surprises, and make informed decisions from offer to closing. And if all that information wasn't good enough, attendees of this webinar can win a $250 gift card to the Home Depot, courtesy of Home Advantage. To qualify for this, you must stay on for the duration of the webinar. Now, before we get started, I'd like to mention that this session is a live webinar and a recording will be sent out shortly after. You will be in listen-only mode, but our presenters will have some dedicated time to answer your questions towards the end of the presentation, and we encourage you to ask them along the way by typing into the Q&A box. So please join me in welcoming our presenters for this evening. Besides myself, we have Stephanie Smith, Vice President of Operations for Home Advantage, Cesar Melendrez, Real Estate Consultant with Jason Mitchell Real Estate, Veronica Moskowitz, Director of Mortgage Operations at LAPFCU, and Maria Asensio, our Insurance Specialist for LAPFCU Insurance Services. So tonight we'll learn more about Home Advantage and its many benefits for LAPFCU members. We'll discuss making the decision to buy, how to select a real estate agent, the purchasing process, finding the right home, current market trends, financing options and what LAPFCU has available, and last but not least, home insurance. Now, without further delay, I will hand it over to Stephanie.
Hi, everyone. Thank you for joining us this evening. I'm Stephanie Smith, the VP of Operations here at Home Advantage. I'd love to take a few minutes to walk you through how the Home Advantage program can support you when you're looking to buy a home or even sell your current residence. Home Advantage is a free member benefit designed to make your real estate journey easier, more guided, and more rewarding. Whether you're a first-time home buyer or you've been through the process before, we're here to simplify things for you and connect you with the right resources from the very beginning of your process. When you register with Home Advantage, we match you with a trusted and pre-approved real estate agent, someone who is educated and knows your local market or your market of interest and is committed to providing a high level of service. These are not just any agents. These are agents that we've carefully selected. They have gone through rigorous training, ongoing training, and we do require them to provide a high level of service to all of our credit union members. We do this to make sure that all members have a great experience while they are working with our agents from start to finish of the home buying process. We do have agents in all 50 states across the US, so whether you're wanting to stay local or relocate, we do have an agent available to assist you. One of the biggest benefits of the program is our built-in savings. Our agents have already contractually agreed to provide 20% of their earned commission back to you, either through the transaction or after the closing in the form of a rebate check. This is a huge benefit. The average reward benefit provided is around $1,900. However, this is based on the purchase price and the agent's total commission amount. As you can see in this example, if the purchase price is $500,000, you can estimate a $3,000 reward benefit being provided to you, again, either through the transaction as a closing cost credit or being provided to you after the transaction as a rebate check. So not only are you getting the expert guidance from our agents, but you're also receiving money back at the end of your transaction just for using the Home Advantage program. In addition, to your agent. You'll also have the support of the Home Advantage team behind the scenes. We're here to help you answer questions, assist with agent matching, and making sure everything stays on track from start to finish. You also have access to our co-branded website, which is LAPFCU.myhomeadvantage.com. This co-branded website serves as your one-stop shop for all things real estate. Here you can search for homes, explore neighborhoods, connect with agents, and access helpful tools and resources all in this one convenient place. At the end of the day, Home Advantage is here to provide you with trusted guidance, a seamless experience, and real financial benefits when you're making one of the biggest decisions. And with that, I'd love to introduce you to one of our experienced Home Advantage agents, Cesar Melendez with the Jason Mitchell Group, who will walk through what it's like to work with an agent and share insights on today's market. Cesar?
Thank you, Stephanie. Good evening, everyone. My name is Cesar Melendrez. I'm a local Los Angeles real estate agent. I'm super excited to talk to you about the home buying process. I'm sure you noticed that real estate's been a hot topic the last couple of months, especially with the affordability crisis in the Middle East and how it affects you as a buyer and seller moving forward. And we'll discuss that in detail. So everything starts with a choice, deciding to buy a property. We'll discuss some of the pros and cons of renting versus buying, how steady income plays a huge role in your purchase loan, some of the different down payment programs available to you. We have, again, inflation, affordability, costs of the Middle East, how the rates have actually increased, and how that cost passes on to you, the consumer. And again, we'll discuss how that affects you moving forward. And of course, in California, we know that prices are basically really high, really expensive. Home Advantage does offer agents nationwide. So if you're looking to relocate, we do service all 50 states. So if you're looking to relocate out of California or a different state, we will certainly accommodate you. Renting versus buying. So when you are a renter, it's easy to get up and move. There's really no commitment when you're a renter. Bear in mind that when you rent, you're paying 100% interest. There's no tax benefits. On the plus side is that there is basically less responsibility. The cost of the maintenance, insurance, and interest is passed on to the landlord, right? And again, with affordability, it's very expensive for tenants nowadays to find affordable housing and therefore are forced to relocate. Now, on the buy side, it does take a commitment. The average home buyer stays in a home about 7 years before they go back on the open market. Some of the tax benefit of buying a house is actually writing off the living space. So if you are lucky enough to work from home, you can actually write off the living space in your property. A nice little write-off there. But of course, there's more responsibility as a homeowner. You have insurance, mortgage insurance, taxes, utilities. Yes, it is very expensive, but the trade-off is the equity. We know the properties appreciate in value much higher across the country, and that's part of a pride of ownership. Finding a home. So where do you start? Location. Location is everything. So my recommendation is find a location that fits your lifestyle, kind of resonates with you. Are you more like a beach city person, living by the Canyon Mountains? Find something that really works with you. And definitely make a list of features of a home that you would like to purchase with new construction, perhaps maybe a fixer-upper where you want to make your own custom finishes, or sometimes maybe a full-service townhome where they offer a full concierge, a gym, a swimming pool. That definitely helps living in those type of properties. And you can find these properties on the Home Advantage search portal online. You can find listings, great resources for mortgage calculators. One of the great things about the search engine on Home Advantage is basically it's very well insulated. They do not sell your information. It's very well protected regarding privacy as opposed to other third-party search engine sites. So you need 24 months of steady income to qualify for a home mortgage. The lender will use a tool known as debt to income ratio, DTI. All that means is they divide your monthly income by your monthly debt, and they will calculate for you a mortgage loan that you can qualify for. Bear in mind that when you're buying a property, it's two things. It's your down payment plus the cost of closing, basically the financial cost of the financing. This is where the cash rewards plays a huge role in this purchase transaction. You do get a rebate from the agent's commission, home advantage agent commission, to offset some of the closing costs, which is a great way to save money. Your lender will also sit with you regarding your monthly payments, set proper expectations. Bear in mind that your mortgage payment will dictate your desired purchase price. Now that you're ready to look at properties, you definitely want to get pre-approved before you make an offer. 38% of transactions canceled because the buyers were not pre-approved. So definitely get with your lender, explain to them that your goals, what you're looking to accomplish. This way you are verified and ready to go to look at properties and submit the proper offers. Your home advantage agents will consult with you on specific areas that fit your requirements, and they'll educate you as far as the property values, give you strategies to increase your offer being accepted. This way you have a full knowledge of what the marketplace looks like. The market is competitive, so don't be surprised if there's multiple offers on certain homes. Right now, the hot homes are the ADUs, especially with the guest house in the back, or if the property is completely turnkey remodeled. Make sure you factor in the cost when you're competing with these type of properties. Right, the purchase process. Once you've gone out, looked at homes, you select the right one, you get your offer accepted, then you will make a deposit. Essentially, the seller will take the property off market for you, and you will open escrow. Escrow is a 30-day process from start to finish. They are the third neutral party of the transaction. They'll work with your lender and insurance agent to make sure that your transaction is in compliance, and the lender will notify exactly the amount needed cash to close on your home. Again, this is where that cash rewards really comes in handy. You'll notice quite a bit of a savings that we'll offer to our members. Okay, once you're under contract, the lender will order an appraisal to verify the value matches your contract price. You will do a property inspection, regardless of condition, whether it's a new construction or remodel. I highly encourage doing inspections. Some examples are termite, sewer, roof instructions. You definitely want to know exactly what you're buying. Insurance, you definitely get together with your insurance agent, discuss the proper coverage that's needed for your property. Nowadays, documents are signed online via DocuSign, make it really easy and convenient to sign documents. Once the county registers your name as the new legal owner, then you'll have the keys and get to move in. Upgrading or buying a second home. I see a lot of this with our members where they outgrew their space or looking to move into a more desirable area. This is the power of leverage, taking the equity and reinvesting back into real estate, whether it be multifamily to create that monthly cash flow. With the invention of Airbnb, can create more of a portfolio. So a great way to really invest money into real estate. Current market. So this is the number one question I get asked quite frequently. Caesar, is today now the right time to buy a house? Now, of course, the answer can vary. So I'm going to tell you what the correct answer is. The only reason why anyone should buy a house if they have a steady income, that their employment basically is solid. In other words, that you have income coming in consistently, you know that your company is solid and be there, and you have stability. That is the best time to purchase a home, being that you're not reliant on the market. If you can afford today's prices, of course, yes, it is expensive, then that would be the best time to purchase a home. No one can really say what's going to happen regarding interest rates. Of course, we have conflict in the Middle East. No one really knows what's going to happen. So again, my recommendation is if you can afford it today, you have stable income, you have job growth, we can develop within your company, that is the best time to buy, because if you hold off and you use the analogy of buy low, sell high, it's only going to hurt you, because we know for the last 5 to 10 years, these properties have appreciated almost 50% in value. This concludes my part of the webinar. I'm going to bring in Veronica Mutzmitz, a Director of Mortgage Operations.
Hello, hello. Okay, well, thank you for joining us today. I'm going to reintroduce myself. It's Veronica Moskowitz, and I'm the Director of Operations at LAPFCU. I run the mortgage department and also the servicing department. I hope you enjoy the wallpaper behind me. It's our 90th birthday this month, so we've been in business 90 years. That's pretty unbelievable. Well, to save some time, I'm going to go ahead and get started. Today, we're going to be covering a few topics to be sure you're ready when the time comes. We're going to go over credit, income, employment, and debt to income requirements. I will share with you some programs that we have at the credit union to help you purchase your first home. So whether you're planning to buy in the next few months or just starting to explore, this session should help you move forward with confidence. So where to begin? I would start by taking the first-time homebuyer course, and you can access this through Google. So you type in Fannie Mae Home View Education. There you will see everything you need to know about homeownership. And then just make sure that you save the certification. You're going to need this when you apply for a first-time homebuyer loan. Next, you're going to get qualified. You'll hear two terms, pre-qualification and pre-approval, and they sound similar, but they're very different. A pre-qualification is a basic review of your credit and income, and it's based on information you provided to us on the loan application. So there's no verification that we go through. A pre-approval, say that fast, on the other hand, is much stronger. And that's because we have requested and we have actually verified your income, your credit, and your assets. And the big advantage of this type of approval is showing sellers that you're serious, that you're qualified, and you're ready to go. So my recommendation is that you get started with a pre-qualification first. We'll let you know what your FICO score looks like, whether we can work with your income, and you can always upgrade to a pre-approval later. Okay, next, your credit score. So this is huge for getting approved and locking in a good rate. And believe it or not, a lot of people don't tell you this, but getting a better interest rate has to do with your loan to value and which I'll talk about later, but also your FICO score. So generally, lenders are looking for a FICO score that ranges from 640 to 680. If you're below 640, you will not be able to purchase a home with a prime rate. You may be able to find a higher rate somewhere, but for a standard rate, it needs to be at minimum of 640. So the number one rule is really simple. Always pay your bills on time. My advice, and I give this advice to people like 18-year-olds that are just beginning to get credit cards, is to set up your credit card payments or any type of loan on auto pay. This way, if you're on vacation or life gets busy, your minimum payment is at least being paid. Just one 30-day late can damage your credit score, and it takes a while to get it off your credit score. So try not to fall into that pit hole. And if you can just set up your payments auto, you should be pretty secure that that won't happen to you. The other thing is that you want to keep your credit card balances low, and the ideal ratio for that is 30% or below. So by doing this, it shows that you're a disciplined credit user. And that's what we're looking for. We're looking to see how much of a credit line you have with all your credit cards and your loans and what the actual usage is. And there's nothing that we do with your FICO score. That's the FICO score system. So it'll give you a higher credit score because it knows that you're being disciplined about not using your credit card and maxing them out. And another tip is to avoid opening new credit cards or making large purchases during the loan process. Just last week, we were doing a loan. This was a refinance, and the member thought it would be a good idea to get solar and actually took out a solar loan, and that blew the loan. We were not able to make it work because of the payments that are added because of the solars. the solar loan. So it was really difficult. So we told them what they need to do to pay off some other credit cards, and hopefully we'll be able to make it work next month. So it's really important not to seek new credit while you're doing a loan. And last, you always want to keep the oldest credit card open. And this basically dictates the length of time that you have been a credit user. So I know that, they have all these credit card specials and interest rate specials. And that's great to go for that, but just keep the oldest credit card open. If the rate is high, don't use it, but keep it open. All right, we are now going to move to employment. So Caesar talked a little bit about this. I mean, it's the 2-year rule. Lenders are looking for consistency and stability. We want to see at least 2 years of employment history, and that's preferably in the same line of work. And if you have a second job, that income needs to be consistent for 2 years before we can use the income from the second job to qualify you. The same applies for overtime and bonus income. If you have not received it for 2 years, we are not able to use it. And for self-employed borrowers, we will review 2 years of filed tax returns to determine your qualifying income. All righty, now we're going to talk about debt to income, and it's the acronyms that we use in mortgages is DTI. We use a lot of acronyms, so I'll kind of talk about what they mean. So DTI is debt to income ratio, and this is how we look at your ability to manage a monthly mortgage payment. We have to, as lenders, we have to make sure that you can afford that payment. We don't want to put you into a mortgage that you're going to struggle with. So it's kind of it's nice when you're getting bonuses and promotions, and you're going to make more money, but we can't count on that. So at the time that we're doing the loan, we need to make sure that you're going to be able to afford that payment. So essentially, we add up all of your current debts, like your car payments and your credit cards, along with the future mortgage payment, and we divide it by your total gross income. That's before taxes are taken out of your paycheck. And when you do that math, you're going to come up with a percentage. And in order to get a first-time home buyer loan, your DTI range needs to be between 42 and 45%. So if you're not quite in that range, your options are to lower your purchase price, you can pay off debt, or you'll need to increase your income to be able to fit that range. And you can reach out to us. We can help you come up with a plan. That's not a problem at all. All right, so just some things that are important to know. LTV, that acronym is loan to value. And if your loan to value is above 80%, you're going to need mortgage insurance. You may also hear it called PMI. That will be required. And it's important to know that PMI isn't necessarily a bad thing. It allows many buyers to be able to purchase their home sooner, because it seems to be very difficult now to save the amount of money that you need to put down. And sometimes it's tax deductible. So it's not a bad thing. And we actually see, I had mentioned I manage the servicing department as well. With the value increases that especially happen in California, you're able to see that PMI go away fairly quickly. We ask for an appraisal, and if you're now below 80%, it's actually 70%. If you're below 70%, we are able to remove that PMI. So it's pretty awesome. And as Caesar talked about, for a purchase, in addition to saving for that down payment, you also need to have 2 to 5% of the purchase price just for closing costs. So we've had some members that say, oh, I saved up the 20%. And then we ask them, well, do you want to put 10 or 15% down? And they'll say, no, I want to put the 20% down. And then the next question is, well, who's going to pay your closing cost? So just so that you know that, and on top of your down payment, you need to have closing costs as well. And that pays for lender fees, appraisals, taxes, escrow, and all of that. And then last, when you're comparing interest rate options, make sure that you're looking at the APR, not just the interest rate. It's important to know your total cost of borrowing. So just a little side note on that. We don't get our feelings hurt if you decide to do your mortgage loan with somebody else, but you're our members and we want to make sure that you're getting the best deal possible. So if you want to reach out to us and send us the loan estimate, we can help you compare that loan estimate to what we would offer you. And the reason that we like to do that is that brokers out there will, say, well, we have better rates than LAPFCU, and where they're getting you is bumping up all those closing costs, the fees that they charge, whether it's document processing, underwriting. And so, it gears you in a different way. So if you look at the total APR rate, then you've got a great interest rate and your closing costs are in line, because that rate is lower than what we were going to offer you. So we like to help with that if you want to share that information with us. Okay, well, now we're getting into my favorite piece, because I love to talk about what we can do for you at LAPFCU. So we lend in all 50 states, and that's really important to know because we have a good amount of members retiring and they want to move to Texas, Tennessee, Idaho. We got your back on that. We lend in all 50 states, and our loan amounts can go up to 2.5 million. That would be pretty cool if you're retiring and you can buy a $2.5 million home. Um, we also finance primary homes, second homes, and we do investment properties. We do unit up to 4 unit home. We combine personalized member first service with competitive rates. And when I say competitive rates, we do rate matching. So if you send us that loan estimate that you receive from another lender or another broker, send it over to us and we will do our best to match that rate. And it's a great value for our members. We want you to stay with us. So this is big. We do not sell servicing of your loan. You will never have to talk to the offshore. You actually will get my entire servicing team and Van Nuys, and it's us and only us until we pay off your loan. So that's pretty amazing. We end up really creating this great history with you, with your loan. And as your escrows are going up, which is happening because insurances and taxes seem to be increasing, you can call us and we'll put you on a payment plan to help you out with that. So we do pretty amazing things for our members. And, even if it costs a tiny, tiny bit more to do the loan with us, it's well worth it because we will take care of you for the life of your loan. Another great feature is once you get that loan, we're not, trying to get you into more debt, but we do have a beautiful HELOC loan. It has a low introductory rate and it's at 4.99. So that's pretty amazing. That's fixed for 1 year. And you can use that money. You can add an ADU, you can send your kid to college, you can build your dream kitchen. So once you have equity on that home that you purchased, go ahead and look at our HELOC. It's interest only for the first 10 years, and it has a great introductory rate. So give us a call if you already own your home and you're interested in doing a HELOC. All right, so as far as our first-time homebuyer products, also amazing. We have several programs designed to fit your needs. Our Heroes Home Loan, which is close to my heart. I was one of the team members that helped create this program, and it's strictly for our sworn and civilian members. This program is a no down payment, so that means 100% loan to value. So no money down. You do have to have your closing costs though. So no money down, there's no PMI, and we do a term up to 40 years, making it affordable for you. It's highly unlikely that you will keep the 40-year term. Most people refinance, but and when I say up to, you can do a 30-year fixed rate on that. But if you're looking for affordability, we go up to 40 years. We also have the Welcome Home Loan. It's a 3% down payment with a reduced PMI rate. What's awesome about this program is that you can nowadays, it's even difficult to rent. So you have roommates. This program allows you to rent out the rooms in your house, and we will use that rental income. We'll use that rent as part of your income. So it boosts your income up, making it more affordable to buy a house. We will also use your ADU. So that's the accessory dwelling unit that so many people are adding to the back of their homes for additional income. We'll use the income from your ADU as well. So that's a great product that we built at the credit union as well. The other product is an adjustable program. It's fixed for 5 years, and then it adjusts every year. That one you can put 10% down, and that doesn't have PMI either. So that's a great first-time home buyer. And the interest rate on that one is 1% less than it is on a 30-year fix. So we have a ton of people using that product to only put 10% down and have a great interest rate. So the key is finding the right fit based on your financial goals and long-term plans. And we're here to help you decide what product that is. So what are the next steps? First, you're going to want to complete that first-time homebuyer course. And second, you're going to want to get a pre-approval letter with LAPFCU. You're going to begin home shopping with Home Advantage. And last, you're going to shop for a homeowner's insurance policy as soon as possible. It's taking a little bit longer. And speaking of insurance, I'm now going to pass you to Maria. She's the expert on the topic. But as a final note, homeownership is a big goal, but with the right plan and support from the credit union, it's achievable. And thank you so much for your time. Come visit us anytime in the Van Nuys branch. That's where the mortgage department is. Thank you so much.
Maria, you're on mute.
Can you hear me okay now?
Now
Hello?
we can. Yes,
Okay,
now we can.
perfect. Sorry about that. Hi, everyone. My name is Maria Asensio. I am the in-house licensed insurance specialist for the Los Angeles Police Federal Credit Union. I have provided over 2,000 policies for members in the past 25 years. I work out of the Van Nuys branch, and I work closely with the mortgage team to make your home buying process smooth and simple. We provide all types of insurance, such as auto, home, secondary homes, condominium insurance, renter's insurance, boat insurance, motorcycle insurance, motor homes, etc. But today, we're going to talk about home insurance, what home insurance covers, and the common mistakes to avoid. Home insurance has different layers of protection: coverage A, B, C, D, E, and F. And each layer covers something different. The first coverage on the policy is coverage A, the dwelling coverage. It covers the structure of the home, and it should reflect rebuilding cost and not the market value. Coverage B is other structures. This coverage protects other buildings on your property that are separate from the main home, such as detached garage, sheds, a covered patio. Next is coverage C, personal property. It covers belongings, clothing, furniture, appliances, etc. Coverage D is loss of use or additional living expenses. This pays for temporary housing if the home becomes unavailable due to a covered claim. Coverage E is personal liability. Now, this is a very important coverage, and it is under the homeowner's policy. It provides financial protection if you are sued for accidentally injuring someone or damaging their property, including legal expenses. Coverage F is medical payments, and it pays for small medical bills if a guest is injured on your property. An easy way to understand home insurance is to think of it as layers. One layer protects your home, one protects your personal belongings, and another protects you from financial loss if someone gets hurt. Now, let's talk about the common mistakes people make when shopping for home insurance. In today's insurance market, you don't want to wait until the last minute to shop for your home insurance. I would suggest you shop early, at least 6 weeks prior to the closing, or as soon as you find that property address. Another mistake I often see is not comparing the coverages and deductibles. And this is essential because price alone does not tell the whole story. And a cheap policy is only good until you need to use it. So make sure that if you're shopping around, you have those quotes sent to you, compare them side to side, and this way you'll be able to see all of the coverages, compare deductibles, and look at the price. This is how you compare apples to apples. Work with someone who explains the policy coverages and exclusions. This is important because there's no such thing as full coverage. There's always exclusions with every policy. I would also suggest that you shop for an auto insurance quote when you're shopping for your home insurance. Bundling your policies does save you money. And or a lot of the insurance companies, I should say, are only offering home insurance if you also buy the auto insurance. Now, remember that insurance is not just a lender requirement, it is a financial protection for everything you just worked so hard to buy. Your home is more than a transaction, it's your stability. Make sure your home is properly insured. And if you ever need a quote or have any questions about coverage or would like a policy review, I'll be happy to assist. I look forward to speaking with you soon. I thank you for your time, and now I'll pass it back to Angela. Thank you, Angela.
Thank you, Maria. We did want to remind our members about our end of watch debt protection program. This is a complimentary insurance that the credit union provides. It covers up to $850,000 of combined LAPFCU loans and lines of credit if you pass away in the line of duty. It covers up to $400,000 per individual loan, and it is exclusively for sworn and non-sworn law enforcement personnel. If you're interested in refinancing a loan from another lender to receive this benefit, or if you want to make sure your current loans are all covered as well, you can contact me at 818-779-3398, or you can email me at adennerson@lapfcu.org. So I wanted to give this information. Here's everybody's contact information. We are going to go over some questions. And if you want to talk to someone specifically, here's their information that you can email them or call them and ask them a question. But the first question I have is, I inherited a home that has a remaining mortgage. Would I qualify as a first-time home buyer?
Yes, you would.
Okay. Someone asked, what are discount points?
So discount points, whenever we underwrite a loan, we have a grid, and the grid covers what type of loan it is, whether it's an investment property, a condo, what your FICO score is, what the loan to value is. And those are the points that you are charged on a loan. So that's why those things matter, because it's a grid that covers the risk on the loan. So the higher the LTV is, the lower the FICO score is. Whether it's an investment property, that's considered a risk. You're always going to save your primary home versus an investment property when things go bad. So that classifies it as a risk. And condos tend to be a risk at times. So those percentages are the points slash discounts that you're charged. Why it's a slash discount is at times you fall into that sweet spot, and it's a discount because you do not have to pay points. So that's what that means.
Okay, another question we have is, how do I buy a foreclosure home?
Great question. So there's multiple ways of learning how to purchase a foreclosure. Usually local papers will publish notice default sales, court hearings. That's one easy way. The internet provides different services of companies that will list properties in foreclosure. This is a paid service site. Number three, word of mouth is also really good, especially if someone is looking to sell a property in their default. That's another way of doing it. So there's multiple ways of finding foreclosures. It's a matter of diligent you are as far as being persistent in finding this information. But for the most part, the online paid services are the best resources. Sometimes they'll put the actual court case number, the amount defaulted, when the case hearing starts. So it's a good way to kind of start from there to find any distressed properties.
Thank you. Another one, can I apply for a HELOC for an out-of-state property in Texas?
So Texas does not like HELOCs. So if I don't know if you already own a property in Texas, but Texas is very, very restrictive when it comes to cash out. So they do not allow HELOCs. That's about the
Another,
only state that does that.
that's interesting to
Sorry.
know. No, you're
Yeah.
fine. I didn't know that. Let's see. How quickly can you close my loan?
Oh, so that's a loaded question. We can close your loan as fast as you can get us the conditions that we ask for. So, that's insurance or pay stubs. We unfortunately have to ask for a good set of documents. And so the quicker you get that to us, the faster we can close your loan. Now, if it's a purchase transaction and you're doing a 30-day escrow, we're ready to go basically in like 20 days. But then we will wait for the close of escrow because that's when the seller wants to close. That's when the buyer wants to close. So we'll kind of we'll hang in there until closing day. But just so you know that our average turn time is 17 days to close a loan. So if you want to get that HELOC and you want the money right away, we can do that for you.
All right. Another question. Are there hidden fees or costs that could change before closing?
The only time something like that happens because with all the new regulations and have they rolled out that loan estimate, you can't change fees. And so if they happen, like if my team forgot to charge a fee and we end up having to pay for it on your behalf because we can't surprise you with fees. The ones that you are responsible for that may change is when an appraisal comes in and the value is not what you thought it was going to be. Your loan to value now changes. And so we will let you know whether there's going to be additional points because your LTV now is higher.
Are there options to recast my loan if I put more money down later?
Yes. So our credit union does that. We don't charge you anything for it either. So you basically will reach the loan servicing department and you're going to let them know that you won the lotto and you've got $100,000 that you want to put as a principal reduction to your loan. And that you also want to lower your payments. So we will process that recast and recalculate the amortization, and we will send you what your new payment is and change the system so that we start collecting that amount.
All right. Another one. How long are pre-approvals good for?
They're good for 30 days.
Can I roll in any of my current debt into the home loan?
So you're not able to do that on a purchase transaction. You would have to have money out of pocket to do that. But you can definitely do that, and that would be a debt consolidation loan. So you can, depending on what your mortgage rate is currently, we look and see what you're paying with monthly for your debt. And sometimes it pays to increase your first mortgage interest rate to get rid of all of that debt, because as you know, credit card APRs are like 20, 25%, 30. So it pays to pay a little bit more, refinance, get that cash out to pay the those credit cards. Or if you have such an amazing interest rate, like most of us got in 2020, in 2021, then that's when we suggest doing a HELOC. Or if you don't like to think of adjustable rate, you can do a fixed equity loan. And we go up to 20 years to do that, and the rates are decent for that type of a loan, and you can pay off debt with it.
Okay, I have another question. If I've been off for a year and returning to work soon, how long should I wait to apply for a loan with no debt currently?
Okay, Angela, I'm going to pause with that question. I just want to go back to the equity loans to debt consolidate. So there's no fees on those loans as long as you have a loan amount that's under 250,000. So essentially, you're getting that cash out to consolidate your debt and put you in a better position. And there's no closing costs. There's no fees to that. So it's excellent if that's your goal. Now to answer the next question. So if you have not been working for a year, we're going to need a 2-year history. So the question is, are you receiving some kind of income? Is it disability? Is it unemployment? Did you get a severance pay? Do you have a job offer that shows that you're going to be working? So it is a little bit difficult to get a loan when you're not working. We need consistency. So if you're in the type of business where, say, you're in the movie business and you go in the hiatus like they do, and you don't work for a while, those are always really difficult loans to do because we need to know what the future looks like, and that's very difficult to do. So I would wait until you build that back up again to a 2-year work history, unfortunately.
Okay. If I want to get a loan to buy land and build my first house, would that be under the same loan advertised today or a whole different loan section and rates?
So we at LAPFCU do not do land loans. We do new build outs. So if you're going to buy, say for example in Santa Clarita, I think they constantly have new tracks. And so you buy the lot and then it's going to be built out. We do those type of loans, but we don't do land loans where you're going to build later. So yeah, you would have to do some type of construction loan for that.
Okay, another. Could you be in escrow and the house not pass inspection? If so, do you get any money back?
Caesar, I think that's a question for you.
Got it. All right. Feel
Yeah.
special. If I understand correctly, you are currently under contract. You put your deposit down, EMD. You do your home inspection. Something comes up, possibly a red flag. You decide, you know what? It's too much for me to handle. I'm going to cancel the contract. As long as you don't release your inspection contingency, your deposit is 100% refundable.
That's good to know. This isn't a question, it's a very, very sweet comment. I am a surviving spouse of LAPD detective who served for 28 years. I've been a member with LAPFCU for almost 40 years, having checking, savings, CDs, car loans, mortgage loans, etc. I have to commend and thank the entire staff at LAPFCU for their knowledge, kindness, and professionalism in everything they do. They are amazing. Kudos to all. GPS, Lubbock, Texas. Very,
Thank
very
you so
nice.
much. Thank you.
Um,
And just to add, when you've had a loan with us and you've had an insurance loss, we're known to be very helpful with that as well. Um, in holding the check as we're required to do and dispersing it as the work is being done. And so I just mentioned that because we actually get a lot from Texas. They have all these storms and winds. And so at times there's insurance losses, and we work really closely with our members to help them through that.
so this is a follow-up
Thank you.
question. Someone said, I'm confused. So if you get pre-approved, you have to buy a house within 1 month? Because you said the pre-approval's good for a month.
Oh, I'm so sorry. My brain went to when we issue you the formal approval. That's once you have your house and we issue you an approval letter with all the conditions listed. That's good for 30 days. So no, the pre-approval or pre-qualification letter is good for 4 months. Now, if you haven't found a home and you give us a call before it expires, we will do like a soft pull for your credit, make sure it looks good, and we'll give you another 4 months. And we can do that again and again until you find something.
Okay. Do you provide home loans for mobile homes, manufactured homes? I could not get a home loan with a different credit union due to not owning the land as it was owned by the mobile home park slash HOA, and the land is basically being rented to us.
Yeah. Yeah, we don't do mobile homes. And I'm really trying not to be funny or anything, but the mobile homes you can drive them away. And so it's very difficult to do a mortgage loan with those because, if you're not making the payments, where do we find the home? So not that you would do that, you have all the furniture and everything, but that's really the difference between a mortgage, it's affixed to the foundation, and a mobile home is considered more of a consumer loan because it's like an RV. It can drive away. They're like on those triangle stilts. So yeah, we don't do mobile homes. We do manufactured homes though, but you have to own the land.
Okay, another question. Do you think homeowners insurance premiums will normalize soon?
That for me,
Yes.
I would say God only knows. I would love to say that yes, it probably will, but we haven't seen much of a change in the past few years. The insurance companies have been struggling for a while, and some of the companies I'm sure you've heard have left the state of California, and we have to use now some of the non-standard companies because most of the companies are now picking and choosing the type of risk that they want to take. So if you're too close to the fire line, they might not want to insure your home, then we have to use other companies. So they're still struggling, but we are now more able to sell homeowners insurance than we were 2 years ago. So hopefully it'll get better little by little. So we're hopeful.
Okay, so here is actually a couple questions for Home Advantage. Um, One is if I use Home Advantage, can I use my own agent or do I have to use an agent in their program?
Okay, for that one, yes, you have to use an agent that is already within the Home Advantage program. Like I had mentioned, we do require the agents to go through training, sign an agreement with us, and make sure that they are in good standings with all of their licensing in order for you to be able to receive that 20% benefit. It has to be with a Home Advantage agent.
And then another question was, is it only when I buy a house to use Home Advantage or can I use it to sell a house as well?
You do qualify for the benefit in both sides of the transaction. So whether you're buying, selling, or both, you are eligible on all sides to be able to receive that 20% incentive.
Thank you. Another question. Can you lock a rate and for how long?
Yeah, you can lock an interest rate as soon as you have a property address. So when say you get the pre-qualification and then you're searching for a home, you sign that purchase contract, it's signed by the buyer seller, it's all good to go. You can go ahead and give us a call and we will lock in the rate right away. And we can lock loans up to 60 days.
That is all the questions I have right now. We have a couple more minutes. Does anyone have any questions? Give it a minute to, is there anything that any of you from the panel can think of that we haven't gone over?
Yeah, in reference to that question for homeowners insurance, I want to add that the insurance companies have gotten better, though. They have. 2 years ago, we were struggling, and we are getting much better results from the insurance companies. Normalize, I don't think it'll. Normal is a different word I wouldn't use with the insurance companies, but we are seeing better results nowadays. So yeah, you can find a homeowners policy now, and when 2 years ago, I would say we were struggling to find an insurance company that would take a home that would be in the fire zone or area.
So I have a question, and I think I need to get back with this person. So the question was, if I place my home under a trust, will it still be covered under the death in the line of duty protection that pays off some of your loans? So I think that's a question we need to ask our end of watch debt protection insurance company that we use, because that is a good question. I would think so because they're the owner of the trust, but I would want to talk with them just to be certain. So I will get back to you. We have your information. I will get back to you on the answer to that question.
Good question.
It is a really good question. Okay, well, thanks again to all our presenters. Thank you very much for joining us this evening. It looks like our time's coming to an end. We will be sending out the recording to all who registered, and the lucky winner of the $250 Home Depot gift card, courtesy of Home Advantage, will be drawn tomorrow morning. We will be contacting the winner, so pick up if you see an 818 number calling because you could be a winner. And again, thank you so much for joining us. And we always thank you for your membership with LAPFCU. I hope everyone has a great evening. Thanks again.
Thank you.
Thank you,
Thank
everyone.
you. Bye
Thank you,
bye.
everyone.
Bye.